Good morning. Thank you for joining today's daily webinar. Today's webinar is for educational purposes. Please also subscribe to our YouTube channel and share this presentation with others in your network to help get the word out to other solopreneurs like yourself. So we discuss certain topics on each daily webinar. Today's daily topic is, do you pay capital gains on a solo 401k? So again, welcome back where we break down complex solo 401k topics and make them work for you. Today, we are tackling a question that stops a lot of folks in their tracks. That is, do you have to pay capital gain taxes on your solo 401k? You might already know that investing through a solo 401k offers big tax advantages. But what exactly happens when your investments go up in value? Are those gains taxed? And what if you sell an asset such as stocks, crypto, real estate inside your solo 401k? Do capital gains kick in? Also, go ahead and shoot over any questions that you might have during the webinar. It doesn't have to be questions related to this specific topic. It can be regarding any thing related to solo 401k plans and even self-directed IRAs for that matter. All right. So in this webinar, we'll answer that and more, including how solo 401ks shield you from capital gain taxes, both Roth and pre-tax. What happens when you buy and sell investments within the plan? We'll also discuss what happens when taxes do apply and what to watch out for at withdrawal. And if you are self-managing your solo 401k, we'll share tax steps that could save you thousands over time. So if you are investing through a solo 401k or thinking about it, this is a session that you can't afford to miss. So stick around, because by the end of this video, you'll know exactly how capital gains work or don't in a solo 401k and how to make the most of the tax rules to build serious wealth under your retirement plan. So let's dive in and go ahead and again and shoot over any questions you might have during the presentation surrounding any type of solo 401k or IRA question that you might have. And we'll stop and answer those questions as they come in. So again, today's topic is, do you have to pay capital gains on a solo 401k? So let's first define what a capital gain is. So a capital gain occurs when you sell an asset, like stock, real estate, crypto, or a business for that matter, for more than what you paid for it. Example, let's say that Jim bought a stock. Let's say he bought Walmart stock for $1,000. He then sold it for $1,500. Well, the capital gain will be $500, which is the difference between the purchase and the sale price. There are two types of capital gains. So they're classified based on how long you held the asset. So for instance, there are short-term and there are long-term capital gains. Short-term is when you hold that asset for a year or less. As a result, when you sell it, it's going to be taxed at ordinary income, just like if you received a paycheck. Long term is where you've held that asset for more than a year, and then when you sell it, it's going to get taxed at 0%, 15%, or 20%. It just depends on your tax bracket there. But the maximum would be a 20% capital gain tax. So now that we've defined what capital gains are, let's talk about how it works with the solo 401k. So with the solo 401k, the capital gain tax does not apply. So a solo 401k is actually a good way to shield your capital gain taxes, since they do not apply to retirement accounts, whether an IRA or a solo 401k for that matter, nor does it apply to Roth solo 401k funds or voluntary after-tax solo 401k funds, nor pre-tax solo 401k funds. And therefore, it does not apply to Roth IRAs or traditional IRAs either. So when you invest a solo 401k or an IRA in an asset, whether it's stocks, real estate, or crypto, or private equity investments, or even promissory notes, those are going to maintain their tax deferred status, because a solo 401k, like an IRA, are considered tax shelter vehicles, aka retirement accounts, which means that A, capital gain taxes do not apply, and B, taxes will not apply if inside a Roth solo 401k or a Roth IRA, and C, taxes do apply if you distribute them from the pre-tax solo 401k or a traditional IRA, but it does not. Taxes do not apply until distributions commence, and at that time, it'll be taxed at the earned income tax rates, not at the capital gain tax rates, because capital gains do not apply again to solo 401ks or IRAs. So also when you sell an investment inside a solo 401k plan, let's say, for example, that Jane has a solo 401k plan. She used the solo 401k plan to invest in a rental property. Title to that property was made in the name of the solo 401k plan. Let's say that all the rental payments from that property have been flowing back to that solo 401k. Let's say that that property is sold. Let's say Jane sells that property inside the solo 401k 2-3 years later. At that time, when the property is sold, all those gains will flow back to the solo 401k, and therefore it will not subject the solo 401k to capital gain taxes. Instead, those funds will be sheltered from taxes and continue to grow tax deferred until Jane decides to take distributions from the solo 401k. If she solely used pre-tax solo 401k funds to invest in that property, then when those funds are distributed from that solo 401k, it'll be taxed at earned income tax rates. So whatever tax bracket she falls in at the time of this distribution. If the investment was made through her Roth solo 401k instead, and she later distributes those funds from the Roth solo 401k, she will not pay any tax on the distribution as long as she's had that Roth solo 401k for both 5 years and she's age 59 and a half or older. So it'll be tax and penalty free. So those are things to understand, is that A, capital gain taxes do not apply to solo 401k plans. B, you only have to pay taxes when you distribute the funds out of the plan, and taxes may apply depending on whether it's a Roth solo 401k or a pre-tax solo 401k, and also as to whether the individual is age 59 and a half or older and has had that Roth Solo 401k 5 years, which means it's not taxable, nor does a 10% early distribution penalty apply. Same thing with the pre-tax solo 401k. If you distribute those funds once you're age 59 and a half or older, federal taxes do apply and state taxes might apply, but the 10% early distribution penalty will not apply if you're age 59 and a half or older. So those are items to consider when you ask yourself, do you pay capital gains on a solo 401k plan? We've answered that question, and the answer is no, because solo 401k plans are tax deferred retirement plans, which means that they are taxed at ordinary tax rates once you make distributions. And of course, distributions from the Roth Solo 401k will be taxed and penalty free as long as you've had that Roth Solo 401k for 5 years and you're age 59 and a half or older. So that's the topic for today. I don't see any questions here on the live stream. We want to thank you for joining today's daily webinar. Please like our channel, share it with others. And until next time, have a good rest of the day.